Yeah, good morning, everyone. So, US has seen a positive trend yesterday, and even today morning also more of a positive. Uh, Whereas Asian market are also indicating a positive trend. Uh, we are seeing the dollar index depreciating, which is being taken as positive by most of the emerging markets. Apart from that, yesterday US governor has said that uh, the inflation is here, and they are not very encouraged to cut the interest rate in hurry. So anyhow, market is not expecting any rate cut for the next two meeting. Next rate cut, the market is expecting in June. Uh, so so it's a more of in line with what market was expecting. The statement has come, so not likely to have much impact. Whereas inflation's figures are expected in US and India as well. US inflation is expected at around 2.9%, whereas last month it was 2.9% as well. India today evening, the inflation figure will be there, which is expected at 4.5% versus last month 5.22%. Apart from that, commodities are more of a flattish, oil flat, copper flat, oil is up by around $1. Iron ore is up by zero point 0.5 and steel flat as well. Apart from that, we had seen last 2 day sharp appreciation of rupee. It touched almost at 88, and then we saw correcting to almost at around 86 point in the bottom at around 86.5 and closing somewhere at around 86.8. So this has been talk about that RBI has intervened heavily into the system, but what RBI has indicated that they are looking at gradual depreciation rather than uh, any sharp up or down. So I'm not sure whether this is just RBI intervention or some even the short positions which were there got cut yesterday and day before yesterday. The move seems comparatively positive for equity market. We had seen rupee consistently depreciating, and that is creating a lot of uncertainty about the FII selling. If suppose the rupee stabilizes over here, then quite possible that that can have some positive impact on the equity market also. That need to be seen in another next 2 to 3 days, how the rupee behave, and if it stabilizes over here, then that will act as positive for the equity market. So overall, direction-wise seems positive from international market. We had seen sharp correction in last 3 4 days, so quite possible we may find some bottom fishing or some bounce back in today's trade. Now request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we might witness some range-bound running session. Yesterday, after a sharp correction of almost 1.5%, we believe that a short-term pullback rally can be witnessed into the market as such. On the technical front, yesterday we have seen that the Nifty has respected 23,000 psychological marks on the closing basis, which gives some sort of a relief sign. Going ahead, 23,000 will act as a immediate support level. If it's break that level, then 22,940, 22,840 levels can be seen on the downside, whereas the resistance is placed at around 23,140. If it surpasses that level, then we can witness the bounce back rally to be continued towards 23,200 to 23,270 levels on the higher side. The overall view will remain a cautious as long as Nifty trades below 23,350 levels on the higher side. Till the time, we are not likely to witness major fresh longs positions, but yes, profit bounce back rally cannot be denied after such kind of a fall from almost 23,800 to 23,000 levels. So pullbacks rally can be witnessed, which can be played with the strict stop losses. Coming towards the bank Nifty, 50,000 is the first psychological resistance level. Any move above that level, we'll see the extension of this pullback rally towards 50,270 to 50,500 levels, whereas the support is placed at around 49,340 and 49,000 levels on the downsides. I think that's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. On the derivative front, the last couple of days we have seen a good drawdown for Nifty. With this drawdown, the PCR has come down drastically. It has come down to 0.69 odd levels and it is deep in the oversold zone. So looks like some buying can come in as Nifty stabilizes today. 23,000 level has the highest put base for Nifty and that will act as a good support area. So we are opening about 40-50 points up and if Nifty comes to around 23,000, 22,950 odd level, that would be a good area to start buying again. For Nifty with a view of 23,300 to 23,500 coming in again. Open interest continues to remain high and that is one cause of worry while the VIX is below the 15 levels. All in all, some support bounce can come in the next couple of trading sessions. From the stock specific front, nothing much to say. Almost every stock witnessed some selling pressure yesterday. And looking at the overall open interest, looks like pharma sector is one sector which can probably witness good support buying if Nifty comes down. And stocks like Laurus, Divi's, Dr. Reddy, Sun Pharma, these stocks can probably provide good support area. So look out for the same. Yeah, that's it from my side. Like to have the fundamental team to take over, please.
Thank you. Good morning, everyone. So yesterday there were a couple of con calls that we attended. One of them is Galaxy Surfactants. If we look at the quarter performance, it was weak on both levels, top line and margins. During the quarter, there was overall volume degrowth of 1%, and AMET regions has seen degrowth. AMET and India regions has seen the degrowth, where rest of the world market has seen the 9% volume growth. This is on account of recoveries in premium specialties. During the quarter, it has seen the supply chain volatility that has led to increase in the operating expenses, higher up to rupees 150 crore versus rupees 120 crore historically. The management expects this come down to an extent in the future. Also, weaker than expected festive season led to consumer destocking and inventory build-up has been paused because of inflation and geopolitical uncertainties. The company's investment in capacity expansion has also dragged down return ratios in the range of 13 to 14%, which we believe to be improved with better scale-up in operations and overall utilization levels. In terms of guidance, the management guided for volume growth of 6 to 8% range over the next 2 years, and full year FY25 EBITDA is guided at rupees 19.5 to 20 per kg, which is expected to improve up to rupees 20 to 21 per kg. The stock is trading at a PE of 22 times to FY26 earnings. We remain neutral on the stock over the near term. Patanjali Foods hosted the con call. In the con call, the management highlighted that the quarter operating margins were at improved levels of 5.9%. This was led by improved margin in the oil business, which is assumed to be an outlier. The management highlighted 3% normalized margins for oil business. Also, it will focus on high margin FMCG business going forward and targeting 50% of the total revenue from the segment over the next 4 years. The company has spent 2.5% of its revenue on advertising and sales promotion. While the management is positive on the expected improved purchasing power of consumers on the back of inflation curbs, also it has fully integrated its HPC business starting November 24, and the same is expected to strengthen its product portfolio and drive its revenue and EBITDA. We are neutral on the stock, where stock is currently trading at a PE of 32 times to FY26 earnings. Eureka Forbes had hosted the con call yesterday. Overall, on the result front, the result was okay, where the revenue has seen the growth of around 11%, and EBITDA margin reported at around 10%. If we look at the revenue adjusted for discontinued operations, it has grew by around 11.3%. Product business has seen the growth of in mid-teens, and it was driven by the premium innovations and robotics. There was a strong consumer upgradation from mid-price segment to premium products during the quarter. And air purifiers revenue has increased by 3 times YOY, mainly from the higher contribution of North India. The management has highlighted that it will see the expansion in air purifiers and robotics beyond North India as well. In terms of service segment revenue, it has seen the growth of in the mid to high single digits, lower than the product segment. The management expect growth in the service revenue with better penetration of AMC. During the quarter, it has spent on advertising and sales promotion, which has seen the growth of 19% on a YY basis. And in the last quarter, we had seen that it has grown by 40%. In terms of ESOP charges, it expects annual run rate of rupees 23 to 25 crore. The company will focus on investments in innovation and customer experience, and better performance from the service segment. Further, on the YTD level, if we look at the margin expansion, it has seen the 100 to 120 basis of margin improvement, and the management is expecting to keep the same momentum going forward. We had recommended this stock in our last monthly call at around 550 price, and one can accumulate at this level, where the stock is trading at a PE of 37 times FY27 earnings. We remain positive on the stock. On the result front, Lupin Limited posted the results above expectations. Revenue grew by around 11% on a YY basis, and on an operating margin level, it reported 23% versus expectation of 22%. The stock is trading at a PE of 25 times to FY26 earnings. We will provide the further update from the con call today. Thank you.
Good morning. Steel Authority of India Limited posted its results. Result is broadly in line with expectations. Offtake was in line with expectations at 4.4 million ton, which has grown 7.3% quarter on quarter and 16% year on year. EBITDA per ton came at 5,192, which has declined 26.7% quarter on quarter and 7.8% year on year. Realization per ton has declined 7.5% quarter on quarter and 9.4% year on year. EBITDA came at 2,284.7 crore, which has declined 21.3% quarter on quarter and 6.8% year on year. Adjusted PAT was below expectations. We will provide the outlook after the con call today. National Aluminium Company Limited posted, we attended the con call of National Aluminium yesterday. It has achieved its highest ever quarterly and 9-month cumulative turnover profit after tax and EBITDA since inception. Alumina sales volume came at 3.75 lakh ton, which has grown 31.6% quarter on quarter and 9% year on year. The quarter 4 estimate is around 4 lakh tons. If it will do around 1 million tons from the refinery expansion by FY27. Aluminium sales volume came at 1.06 lakh tons, which has declined 12.4% quarter on quarter and 7.2% year on year. There were no exports in quarter 3 due to higher domestic realizations. The FY30 target is additional 5 lakh tons from the new smelter expansion. All facilities operated at 100% capacity with increased production in bauxite, alumina, and thermal power. Alumina realizations were $641 per ton, and for the 9-month period, the average realization stood at $562 per ton. The company is targeting 5 to 10% volume growth in alumina and aluminium production. Our outlook is neutral on this stock. Thank you.
Good morning, everyone. On IPO front, today Exaware Technology is opening for subscription. Its issue size is 8,500 crore, completely offer for sale. The company is mid-sized Indian IT firm catering to global clients. It services 31 out of Fortune 500 companies, wherein it offers AI-enabled solutions across various industries like financial, manufacturing, banking, high-tech, and healthcare, amongst others. This mitigates risk associated to the particular industry downturn. The company has established long-term relationship with its customers with an average tenure of 15 years with its top 5 and top 10 clients. Hexaware has 39 global delivery centers with a team of around 32,000 employees. Over a period of time, it has successfully created AI-enabled platforms, RapidX for digital transformation, Tensai for AI-powered automation, and Amaze for cloud adoption. Hexaware has shown a robust performance with revenues growing at a CAGR of 13.7% in USD terms between FY21 to 23, while the industry grew at a CAGR of 7.3% during the same period. In INR terms, the growth is higher at almost 17.5% during the same period. So, in nutshell, Hexaware business has undergone significant transformation over the last decade, driven by its adaptive business strategy, wherein it has expanded its offering and base, its global delivery footprints, increased for focus on innovation and technology. The bidding date for the IPO is 12 Feb to 14 Feb. The price band is 674 on lower band, 708 on upper band. The market cap for the issue is around 43,000 crore. Shares are available at 37.8 times P and EV by EBITDA of 23.3 times on TTM EPS earnings, which seems reasonable. Thus, recommend subscribe for the long term to the issue. Thank you.
Yeah, that's all from us. And I'll request commodity team to take up from you.
Yes, sir. Thank you very much. Good morning, everyone. So, gold has already opened a gap down almost 600 points. So, one should wait for a pullback around 85, 200 and sell with a stop loss of 85, 600. On upside again, on downside, we are expecting 84 500, 84 400 levels. So selling on rise is the view. And in silver also, one can sell around 95, 95,000 with a stop loss of 95 700. On downside again, 94,000 is the level where one can book profits. Uh, in crude oil, prices are consolidating from 63 to 6400. So buying on dips around 63.20 with a stop loss of sorry, 60 to 50. And on upside again 6400 is the level where one can book profits, wherein natural gas one can initiate a buy around 302 levels with a stop loss of 294. On upside 312.15 is the target. And in metals, copper, one should wait for a pullback around 856.57 and sell with a stop loss of 860. On downside, 848, 845 is the target we are eyeing for. And similarly, zinc sell around 268 with a stop loss of 270. On downside, 265, 264 is the level where one can book profits. So that's it from us. Thank you very much.